Collapse File Number 29. Subject: China Evergrande Group. Liabilities at death: $330 billion, the largest debt failure in history. Victims: an estimated 1.5 million families who paid, in full, for homes that do not exist. Cause of death: it sold the future and spent it first. This is the Collapse Files. The file begins in a village in Henan Province, in the poorest China of the 1960s. Hui Ka-yan was raised there by his grandmother in a house of mud and straw. He would say later that his ambition was simple: to leave. He left 10 years as a technician in a steel mill, furnaces, quotas, iron discipline. Then, in 1996, in the southern boomtown of Guangzhou, he founded a property company and named it Evergrande. His timing was very nearly perfect. Because China was about to attempt the largest migration in human history, hundreds of millions of people moving from farms into cities. Every one of them would need an apartment. Hui Ka-yan intended to build it for them. What followed was the greatest building boom in history, and Evergrande grew faster than anyone. The question worth holding onto is, with whose money? Here is the machine. Evergrande did not build apartments and then sell them. It sold them first, years first. Families queued overnight to buy homes that existed only as drawings on a showroom wall, and they paid up front. Those deposits bought the next piece of land, which sold the next drawing, which bought the next piece of land. On top of the deposits, bank loans. On top of the loans, bonds in Hong Kong and New York. On top of the bonds, IOUs to builders and suppliers. Every layer of the tower was borrowed. It worked brilliantly, spectacularly, for exactly as long as prices rose. And prices rose. In 2017, Evergrande's share price climbed 469% in a single year. Its profits grew ninefold in 6 months. That autumn, the boy from the mud brick house became the richest man in Asia. $42.5 billion, more than Jack Ma, more than the founder of Tencent. The steel mill technician had outearned them both. Now the first twist in this file. Ask who Evergrande's biggest lender was. Not the banks, not the bondholders in New York. The biggest lender was standing in the showroom queue. Ordinary families, handing over their life savings for unbuilt homes, were financing the company interest-free. The customers were the bank. And when even that wasn't enough, Evergrande's wealth management arm sold investment products promising fat returns, marketed through its own staff, and bought, in their thousands, by its own employees and homebuyers. The company had borrowed from every person it touched. What does a man do with the world's fastest money machine? He buys a football club and wins the Asian Champions League. He breaks ground on a stadium shaped like a giant lotus flower, planned to be the biggest in world football. He sells bottled water, grain, cooking oil. There is an Evergrande for almost everything. And then there is the boldest one, Evergrande's electric vehicle company. Hui vowed to overtake Elon Musk within 5 years. At its peak, in April 2021, that company was valued at $87 billion, more than Ford, more than General Motors. The number of cars it had sold to the public, 0. A carmaker worth more than Ford, with no cars. A developer whose lenders were its own customers. By 2020, somebody in Beijing was looking at all of this and reaching a conclusion. In August of that year, the regulators drew what they called the 3 red lines, hard limits on how much debt a developer could carry. Cross one line and your borrowing was restricted. Cross all 3 and you could borrow nothing at all. Evergrande crossed all 3. The machine that ran on new money was now forbidden by law from raising any. There is no gentle way down from a tower built entirely of borrowing. August 2021, the wealth management arm, the one that had sold products to its own staff, quietly stopped paying out. The reason it gave was difficulty. September the 13th, hundreds of investors, many of them Evergrande's own employees, surround the headquarters in Shenzhen, demanding their savings back. Police move in. The offer that eventually came back to some of them, 2,000 yuan a month, about $275. Suppliers had it stranger still. Some builders were now being paid in the only currency Evergrande had left, unfinished flats. The tower was consuming itself. That same month, Evergrande began missing interest payments on its dollar bonds. Grace periods were survived at the wire once, twice, and then, in December, they weren't. The ratings agencies made it official. The most indebted developer on Earth was in default. Off the coast of Hainan sits the monument to what this company believed about itself. Ocean Flower Island, an artificial archipelago shaped like a blossom, half again the size of Dubai's palm. The largest man-made tourism island on the planet. 3 days before New Year, 2021, a local government revoked its permits and ordered 39 of the island's buildings demolished. Evergrande was given 10 days to respond. The empire was now being dismantled, literally, tower by tower. Everything so far reads as a collapse, reckless, leveraged, but legal. What turns this file from a bankruptcy into a crime scene is a document that arrived in March 2024. Exhibit A, an administrative penalty decision from the China Securities Regulatory Commission, the CSRC, concerning Hengda Real Estate, Evergrande's main operating company. The finding, in 2019, Hengda's accounts had inflated revenue by 214 billion yuan. In 2020, by a further 350 billion, 564 billion yuan in total, $78 billion of revenue that never happened. By the regulator's own arithmetic, among the largest accounting frauds ever recorded. And on the strength of those invented numbers, the company had sold bonds, which the regulator now called fraudulent issuance. The decision named the man, it said, had ordered the books falsified. It stated that Hui Ka-Yan had, quote, instructed other personnel to falsely inflate the results. Read that back against the showroom queues. The families weren't just buying unbuilt homes. They were buying them from a company whose accounts, per its own regulator, were fiction. By then, Hui had already vanished from public view. In September 2023, a stock exchange filing disclosed that the founder was under, quote, mandatory measures, Chinese legal language for detention on suspicion of crimes. The fine that followed banned him from the securities market for life. His fortune, once $42 billion, had shrunk by more than 90%. January the 29th, 2024, the High Court of Hong Kong. After 7 hearings and no viable plan, Justice Linda Chan delivers the sentence on the company, quote, it is time for the court to say enough is enough. Winding up ordered, liquidators appointed. The liquidators walked into the wreckage of the world's most indebted developer, holding claims against $330 billion of liabilities, a hole roughly the size of Finland's entire economy, and began the search for whatever was left. August 2025, Evergrande's shares, suspended for 18 months, are struck from the Hong Kong exchange altogether. 15 years after listing, the stock is worth, officially, nothing. April 2026. A courtroom in Shenzhen, the same city where the Savers once surrounded his headquarters. Over 2 days, Hui Ka-Yan pleads guilty to 8 charges, including fundraising fraud, illegally taking deposits from the public, and misuse of funds. As this file closes, the verdict has not been read. Legal observers expect it may be a life sentence. The man who wanted only to leave the village is now waiting to hear whether he will ever again leave a cell. Beijing, meanwhile, has spent some 350 billion yuan, nearly $50 billion, on special loans with one instruction: finish the homes. Many towers have been completed, many have not. And that is who this file is really about. Not the bondholders, they knew the game. The quietest victims in this series, 1.5 million families who did everything right, paid in full, and are still paying mortgages on apartments made of air. The tally, $330 billion owed, 78 billion of revenue that never existed, 1 artificial island partly demolished, 1 football stadium never finished, 1 fortune of 42 billion gone, 1 verdict still to come. The towers are still standing there, unfinished, from Hainan to Henan, the province where a boy once promised himself he'd leave the mud brick house. File 29, closed.